Not much content for you guys today because all I really did was work out and then go shop around for a bunch of stuff. Figuring out how to get a P.O. box. Got a ton of printer paper, a bunch of client folders. And then these things, man. These two little things right here. $110. $110 for these two little rolls of stamps. That's nuts. And they're saying that the post office is going under. People need to buy more of those then. But yeah, all I really did was work out, go shopping for some stuff, and hang out with my girlfriend. And so, sorry. So because of that, I want to show you guys how much a health insurance broker makes in Nebraska. And this will actually be Nebraska, Kansas, and Iowa. And remember, this is just at the time of this video, and it obviously varies a couple percentages based on carrier, based on company. So I'll turn you around and show you the breakdown of my commissions, and it will be based on products. And everything I will list is just a percentage, and that means a percentage. Actually, not everything, but the percentages that are listed will be a percentage of the monthly premium that the client is paying for their plan. And also one more thing real quick, these are just the starting level commissions, or what's known as street commission, meaning if you're by yourself and you don't have a lot of production and a lot of clients already in your book of business with these companies, or a big track record that shows that you have sold a lot of one type of product in the past at a different agency, then everyone starts you off at street comp or street commission. And then of course, as you get more clients underneath you, you maybe get to a different FMO or GA, they can offer you 1 or 2 points higher because they know that you're kind of more likely to sell certain types of products because that's your focus on your agency. And they also know that you're more likely to sell certain companies and certain insurance carriers. But that's enough chit chat. Let's get down to it. Here we go. Starting off with Medicare. Medicare supplements are 22% typically per company for the first 6 years, and then drop down to 3.5% years 7 through 10. And with Medicare supplements, typically actually the average Medicare supplement is only kept for about 5.5 years. So you're never really seeing this part here in terms of your commission, because after about 5 to 6 years, companies have raised people's rates so much that they start shopping around for a new plan. That's just kind of how the supplement game works. And again, just wanted to iterate that this is, these are going to be pretty accurate in terms of average starting commission levels for Nebraska, Kansas, and Iowa throughout the whole thing from top to bottom. So moving on, Medicare supplements. Their, I guess, direct competition is Medicare Advantage plans. You either love these guys or you hate these guys for whatever reason. They're very controversial. But if you sell a Medicare Advantage plan, you get a $255 check or direct deposit nowadays, just flat up front, and that's just a one-time payment. If it's a renewal, meaning if they've had an Advantage plan before. But if the client is new to Medicare and or new to just Advantage plans in general, then that's doubled, and you, as a broker, receive $510 as of right now, as of 2020. Prescription drug plans, these are needed if you have a Medicare supplement. They're not really needed if you have an Advantage plan, because most Advantage plans will wrap in prescription drug coverage as well. That's why it's MAPD, Medicare Advantage and Prescription Drug. That's what that stands for. But prescription drug plans, You receive $40 if it's a renewal, and that is just a one-time payment. It's barely anything. That's an annual payment. Sometimes a carrier will break it up into monthly installments, so you're getting like $3 some a month, which is ridiculous and funny, but that's how it goes. They oh yeah, so that's $40 if it's a renewal, and then $80 if the person is new to Medicare, similar to the Advantage plan setup or situation, I guess. The prescription drug plans have such little commission that most brokers actually just kind of do them out of charity and just help their clients sign up with it without getting compensated, because also not only are the commissions low, but in order to sell those, you technically need to go through additional trainings and take online courses and certifications with every different insurance company that you're going to be selling those through. So they're just tedious, and the ROI for spending your time on getting ready to sell these plans isn't always the best. So a lot of brokers just won't mess with them. But I think it's worth it personally. Moving right along here, we have the under 65 health insurance market, which is, I would say, my primary focus at this time, just because there are not a lot of insurance brokers that do under 65 health insurance anymore. And you will see why with the commissions in just a second here. Starting off first with the Obamacare, Affordable Care Act, Marketplace, whatever you want to call it. Us brokers only get $18 a month per policy typically. Yikes. That's not a lot at all. But some carriers have recently started doing $18 a month per insured. So if you have a family of 4, then you get $18 a month times 4 every month, which is obviously better than just $18 a month per policy. But yeah, once this came out, a lot of brokers stopped doing under 65 health insurance altogether, just because they realized the commissions really were not that good. And so their time was much better spent on like the Medicare market or group. But an alternative to the ACA, the Affordable Care Act coverages, are share programs. Now, share programs, I don't know where to begin. They're not technically insurance. They are, these are the ones that are more religious based. So you'll see a lot of Christian programs. You see some association plans starting to pop up here and there. It varies by state though. But yeah, these technically are not insurance. So just a forewarning there. And they won't use typical terms like copay, deductible, max out of pocket, things like that. So just keep that in mind if you are a broker. And make sure you explain that to your clients. If you're a client or someone shopping around, make sure that you understand the differences between these and insurance. Now, with that, getting that out of the way, the commissions for share programs vary across the board, but typically, and also my favorite one, does 10% starting commission the first year, but then they trail off sometimes. Again, it depends on company and how they want to operate their membership, their share program. Then next line down here, short-term medical plans. These are, dare I say, the best alternative at the moment to Obamacare, assuming you do not have any pre-existing issues, or your pre-existing issues are very minor. You know, maybe you just take 1 or 2 high blood pressure medications and a cholesterol, or you're on a thyroid medication, whatever. These ones are going to be the best alternative to Obamacare. But still, again, starting commissions on these suck. 15% is not much at all. And oftentimes people are coming to the short-term medical plan, just because their other options, the share programs or the ACA, are too expensive. It's not too uncommon to see very low premium for short-term medical plans. People that get these plans can't afford the ACA, or they don't want to pay for the ACA. So, I've even written a short-term medical plan under $100 a month. So that's $15 a month, which is not that good, obviously, for commission. So when we say health insurance is a numbers game, we're not lying. And then moving on, last thing for the under 65 market, we have these mech plans, which are kind of new and starting to gain some traction. I personally don't sell a lot of these, just because they're kind of weird and niche plans. They combine pretty well with a high deductible short-term, or any high deductible plan, or any plan that has that does not have co-pays, because what mech plans cover is all of your preventative care, and they'll also sometimes throw in co-pays. So they'll give you X number of visits for a doctor or a specialist per year at like $50 instead of paying full price. And they'll also include prescription drug coverage sometimes. So they're never really just a standalone policy, because obviously if you just get that, then you have no coverage for the big stuff, for inpatient, for hospital coverage. So again, it combines really well with a higher deductible plan or a plan that just does not have co-pays. So those are mech plans, 25% commission for those guys. Pretty decent. Well, much better actually than everything else for the under 65 market, but they're just very niche. That's probably why the commissions are so high. And then lastly, we have our ancillary health insurance products. These things are, first off and foremost, your dental, vision, and hearing. Now, believe it or not, you can actually get 50% commission with at least one carrier that I know of in Nebraska, Kansas, and Iowa. 50% commission, which is very amazing for these simple products. You often now will see all three wrapped into one. You'll see a DVH plan, a dental, vision, and hearing plan, or at least a dental and vision plan. You can still get standalone ones though, but 50% commission for these policies. Then the next type of ancillary or gap plans are critical illness, accident, and hospital indemnity. Now, these are the most controversial types of health insurance products because they have the highest commissions, 35 to 50%, and I don't want to say they're not needed, because there is a time and place for them, but just be careful with these guys. A lot of brokers will unfortunately sell someone a super high deductible plan and say, hey, you can't afford a $7,000 unplanned expense, so let's get you a critical illness plan that will pay you $7,000 if you get diagnosed with cancer, or will pay you a $7,000 benefit if you fall and break your leg, or will pay you $2,000 if you lose an eye, or something weird like that. And hospital indemnity plans just pay like $300 a day, for the first 5 days in the hospital or whatever. So these guys do have good benefits. These critical illness, accident, and hospital indemnity plans do have good benefits, but you have to weigh the cost. Does it make more sense to have a higher deductible and pay for the gap plan, pay for the cancer plan or the heart plan on top? Or does it make sense to just pay for a better health insurance plan and not have a gap plan? But unfortunately, brokers will often get people a high deductible plan or a high max out pocket plan, or both, and then say, hey, client X, you can't afford these huge unexpected expenses, so let's get you a gap plan to wrap in that, just because commission on these are 15% or like $20 a month, but commission on these is 50% usually. So watch out for these. Again, there is a time and place for them. They do work. They help people a lot, but just make sure you know what you're getting. That's my soapbox for those. And then the last of the ancillary type of health insurance, or gap plans, or add-ons, whatever you want to call it, is telemedicine. You can get 40% commission for telemedicine plans, and usually telemedicine plans are just $20 a month, so not much commission in these, but I highly encourage everyone to add these on to every policy that they do have, just because it can save you a lot of time and a lot of money, and it can give you a second opinion too, honestly. So there you have it, guys. There are all the commissions for health insurance, starting with the over 65 market, the Medicare side. Medicare isn't always just over 65, by the way. There are some exceptions. But then moving on to the under 65 commission recap right here. And then the ancillary or gap plans, as a lot of people call them. So there's all the commissions. So just a couple key takeaways. One being that it takes a lot of clients to make any real good money as a health insurance broker, because as you can see, most of the commissions are in the below 25% range. So it takes a lot of clients. We're not making a lot of money off of you as an individual. It's a total numbers game from our perspective. So that's the first takeaway, is that health insurance, to make good income from it, it takes a couple of years, to build that book of business. Then the second biggest takeaway is, again, in regards to those ancillary products. I know I'm beating a dead horse at this point, but with those ancillary products, in particular the critical illness and the accident and the hospital indemnity plans, there is a time and place for those. I don't want to completely knock them. I've signed several people up with those plans, but just be sure you know exactly what they are, and be sure you know that, or you weigh the amount that those plans cost versus what your base health insurance plan would look like if you had taken that money with the those gap plans, with those supplemental ancillary plans. If you had taken the money you're paying for those plans and putting it towards your base health insurance plan, make sure you know how much that amount would improve your plan. Essentially, what I'm trying to get across is that your deductible is the most important thing. You want to get to your deductible as quickly as you can, either by having a plan that reimburses you, like a gap plan or an ancillary plan that pays you out directly so you can put that money towards your deductible, or just by having a low deductible in the first place. Because the quicker you can get big insurance company to start paying your bills for you, or helping pay your bills at least, the better, obviously. But otherwise, thank you for watching this video. I hope I gave you some insights into kind of the insurance industry. If you're a consumer, I kind of gave you some tips on what to look out for. I like being completely transparent, and this right here shows you guys exactly what I make per policy, and with the starting health insurance broker in Nebraska, Kansas, and Iowa. Again, this varies by state, but you get to see what the beginner and the beginner brokers make, and you can see that's a complete numbers game. If you guys have any questions on this, or if you're again confused about percents or renewals, what those mean, or new to a policy, what those mean, drop something down in the comments, leave your questions there. I'd be happy to answer them. But I wanted to kind of give consumers an insight, knowing that we're not making a lot of money off of you, truthfully. Again, the money for insurance brokers comes in quantity rather than individuals. I guess quantity rather than quality, which sounds weird saying that, but the more people you have insured, the more these, just the more monthly income you have, obviously. So we're not going to make much money off of you. And also, for anyone who is thinking about jumping into this industry, I obviously recommend it. It's starting to work for me now after bouncing around a couple of different agencies and after creating my own. Now it's finally starting to click and it's starting to work. I'm starting to get referrals pretty steadily, and I'm starting to be able to help out a lot of people. But here's something tangible for you. These are real numbers, real facts. Again, these aren't like one-off carriers. All these street comps are very standard. You can get them no matter which FMO or IMO or GA you go with. Also, please use this as a learning tool if you are in the industry and you're a broker. Save yourself from getting screwed over like I did. I told you guys Medicare supplement commissions are 22% starting for agents. When I first got in the industry, my agency was giving me 12%. And I didn't know any better. So take this information, use it however you want. If you're a consumer, now you know how we get paid. If you're a current broker, I'd be excited to learn what these commissions can go up to if you have a huge agency and a big book of business and multiple agents writing business for you. I'd love to see how high some of these percentages go. Also, if you're a broker from another part of the country rather than just kind of the Midwest 3 states that I said, I'd love to learn about the commissions that you guys are getting in other parts of the country. And then for anyone who's thinking about jumping in, here's a completely transparent and upfront what you'll make. It's not a lot at first. It definitely takes time to build your book. Then fourthly, for those who are new agents, make sure you take a look at this, take a look at all the numbers, go back and pause it, rewind it, whatever, take screenshots, I don't care. Even show it to your agency if you're getting less than this, because you should not. Agencies should have enough production and should have enough brokers underneath them that they're able to pay you these street commissions that I listed right out the gate. So don't be like me, don't get taken advantage of, don't be making only 12% on med sups when you can start making 22% just by going out and doing it on your own. So thank you guys for watching. I hope I provided you some value. This was a boring day work-wise, so I tried to be creative and drum up something for you. I thought I succeeded. Let me know in the comments down below. Thanks for your continued support. I love connecting with people online that I wouldn't otherwise be able to get in front of. So thank you again. I appreciate any support by likes, comments, subscribing, obviously, or by showing this video. You know, the more people that see this, the more I can help educate people and ultimately fulfill my goal of helping as many people as I can. So thanks. I've been rambling. You guys are sick of my voice. My throat's getting tired. So I'll say peace out and talk to you guys tomorrow.